Question number 14 on single entry. See, A, B and C were in partnership, and towards the end of 2004 most of the books and records were destroyed in a fire. So it is not necessary that single entry is done only when purposely they keep incomplete records. If records are destroyed in a fire, then also we get incomplete records, and then with the help of single entry system we will come up to the net profit during the year. The balance sheet as on 31st March 2003 was as under. Okay, they have given us the balance sheet. Asset side, cash, debtors, stock, machinery, furniture and fittings, advance payment and current account of C. Now pay attention here. Current account means capital दो में दिया गया है, fixed capital and fluctuating capital. So capital which is remaining constant is here. It is fixed capital 9,000 and the fluctuating capital is here. A का 145, B का 100 and C का 170. So any adjustment which will be done here will be done in your current accounts, and the capital will be remaining constant 9,000 and no adjustments will be done here. So quickly find out the opening combined capital. First of all, there are three partners A, B and C. So when we read the question, we will write here A, B, C and then ratios. Their profit sharing ratios will have to be mentioned. But what is the opening capital? Find out the opening capital of current accounts. It will be 145 plus 100 minus 170. So opening capital you have to note down 145 plus 100 minus 170 will be 75, your combined current account capital. Okay. The partners drawing provided as A itna, B itna and C itna. The drawing has been provided to you. So this will be required for your capital account on 31st March 2004. So 2003 has been given and 2004 some information they are giving, that is for closing statement of affairs. Cash was 3,200. Okay, so for closing statement of affairs, right here cash 3,200. Debtors 4,025. Stock 5,900. 5,900 stock is given. Advance payments rupees 25. It is our asset, we have paid in advance. Advance payments 25 rupees. Okay, and creditors 6,040. So creditors in credit side 6,040. Now before any total, first compare the opening. So opening capital, combined capital is given, you have to put it here. Opening capital, it will come as it is 9,000. We have to find the combined capital here of your current account. So current account capital is missing. Combined capital we will get of three partners A, B and C, which is missing right now, and four items here: advance payment, stock, debtors and cash. Now when we see the opening statement of affairs or opening balance sheet, see here cash we have got, debtors again we have got, stock we have got, and what about machinery? Machinery is not mentioned here. So we'll assume machinery is the same as the last year. Machinery 1440, same as the last year. Furniture and fittings, again assume it is same as the last year. Furniture and fittings is 600. Okay, rest everything is there. So take the total of asset side. 6 items now. The total is 15,190. 15,190 is your total. Subtract 9,000 and 6,040 from here. You get combined current account, which is your balancing figure, and that comes up to 150. That is 15,190 minus 9,000 minus 6,040 comes up to 150. So now the capital is constant. Only adjustment will be done in your current account balance. So combined current account, opening balance. So by balance, that is your opening balance. See, how will you find out the opening balance? We saw 145 A का 100 B का, subtract करो C current account debit balance 170. So 145 plus 100 minus 170, that comes up to 75. That is your opening balance of capital. Immediately write the closing balance also. So to balance, that is your closing capital. We have just find out it is 150. So 150 is here. Now drawings. What 5 things? Opening capital, closing capital, drawings. So 2 drawings here. Now additional capital. So by bank, if any additional capital is there, we'll write here additional capital. And the balancing figure will be net profit. By net profit before adjustment. Okay, so let's start. Is there any drawings? Let's read on. Machinery depreciated, that is your adjustment. For all depreciation is your adjustment. Interest to be allowed on capitals is again your adjustment. This has to be done after you find out the net profit. After that, these adjustments will be given effect. Partner's share. Okay, now the share is given of profit 1/2, 1/3 and 1/6. So A, B or C ka profit sharing ratio is 1/2, 1/3 and 1/6. That net profit distribution में काम आएगा ये ratio 1/2, 1/3 and 1/6 respectively. You are required to prepare a statement showing net trading profit for 2003 and division of the same in between partners together with the balance sheet as on 31st March 2014. Okay, so where is the drawing? The partners drawings provided is A 1400, B 1000 and C 650. So drawing is 1400 plus 1000 plus 650. Total drawings comes to 3050 is your total drawings, and the total is 3200. 3200 minus 75 comes to 3125, and that is your net profit. There is no additional capital given in the question. So 3125 is your net profit before the adjustments. 3200 total. Whatever adjustments we are doing is in our current account. the capital 9,000 has to remain constant, no change in that. When we have given two separate capital account and current account, all the adjustment needs to be done in current account and make a combined current account only. Keep the capital stagnant as it is. Here in this case it is 9,000. Let's start with the profit and loss, statement of profit and loss. Okay, statement of profit and loss for the year ended 31/3/2003. We will start it with the closing capital. So we had already found out the closing capital. Now which capital? Fixed capital is fixed. All the adjustment will be done in fluctuating or the current capital. So closing current capital is 150 as we had found out, and then add less is our mantra. Add less, add का D उठाओ, drawing बनाओ, drawing we had seen it has been given 1400 of A, 1000 and C ka 650, total comes to 3050. So add drawing 3050 and the total is 3200 is your drawing. Less additional capital, add ka full add come here, additional, but there is no additional capital in this case, so just make a dash here. Now opening capital, that is capital at the beginning less opening capital, that we had found out 145 plus 100 minus 170, that came up to 75. So subtract the opening capital and that we get net profit before adjustment. Net profit before adjustment is 3125 is your net profit before adjustments. Now what all things is in adjustment? Two things, depreciation which has to be put in adjustment, and the other thing is interest on capital which has to be given. So first let's take the depreciation. Depreciation charge on assert and less karo because profit will be reduced due to depreciation. Less depreciation. See, on two items, one is fixtures and fittings and the other is machinery. So machinery at the rate 10% on machinery, and fixtures and fittings ke liye it is mentioned it is 7.5%. So machinery, what is machinery in your balance sheet? It is 1440. So 10% of 1440 is 144, and fixtures and fittings is 600. So 7.5%, that is 7.5% of 600 is 45. So the total depreciation comes up to 189. So reduce the depreciation, and then interest on capital. Okay, interest on capital has to be provided at the rate 5%. It is mentioned at the interest on capital 5% interest is to be allowed on capital. Expense for business is paying to the partners interest on capital. Always subtract interest on capital, add interest on drawing. So less interest on capital. Now which capital? कौन सी कैपिटल पे इंटरेस्ट दिया जाएगा? हमारे पास दो कैपिटल है इधर. One is fixed and one is the current capital which is going. So fixed capital पे इंटरेस्ट मिलता है, फ्लक्चुएटिंग पे नहीं. So capital just find out the fixed amount is 9,000. So interest on capital 9,000, that is combined capital is 9,000. Uspe interest has to be given at the rate 5%. It is mentioned 5% of 9,000 comes up to 450. So after subtracting it, we get net profit for the year, which is net profit for the year is 3125 minus 189 minus 450. That comes to 2,486 is your net profit for the year. Now the question is not over yet. You have been given ratios and you have to distribute that profit among the partners. How will you distribute this? 2486. See, 3 partners and the ratio given is 1/2, 1/3 and 1/6. Denominators are different, so take the LCM. LCM come out to be 6. 2 3s are 6, 3 1s are 3, 3 2s are 6, 2 1s are 2 and 6 1s are 6, 1 1s are 1. So the ratio is 3:2:1, in which this profit has to be divided among the partners. So the profit in among A, B and C in the ratio 3:2:1 is 1,243 for A, 829 for B and it is 414 for C when you divide 2,486 in the ratio 3:2:1. Take care, interest on capital has to be given on fixed capital, and if ratio is given like this where denominators are different, take the LCM, find a proper ratio and then divide the profit.